do you self-insure yourself? I'm Justin.
And I myself am Aaron.
And this is Insurance Hacks. And before we go too much further, please subscribe for more great content like this. So we get this question a ton.
We do. How do you self-insure, and when should you self-insure?
Excellent question in every way. I have the answer. It's quick. No.
Well, it's a complex question, really. It's a lot deeper than the person asking it thinks, and it is a lot deeper probably than we're going to go in this video. But we're going to give you the big picture overview of it right now.
So before we start, I'm just going to say this. The laws and rules may be different for your state.
Yes.
I didn't dig too much into the exactities of it, just broad stroke things, because if you buy self-insurance, that doesn't further my business, so there's only so much I need to know about it, advice I need to give. But I want to tell you why it might not be the best idea, no matter how much money you've got. Now, before we go too much further, I want to give a disclaimer, okay? There are going to be nuances of how to self-insure in your own state that are going to be different than every other state. There are going to be a lot more details than I'm going to go into. I looked at the broad picture so we could make this video and I could talk about it. And so we will do that. But if you're serious about it, honestly, my best advice is to hire a lawyer who's familiar with it and let him lead you the way. But let's now talk about, what does it look like to self-insure?
Absolutely. So when we think of self-insurance, I guess consumers are probably going one of two directions, and most of the time I think they're only really headed in one direction, and that is their property that they own and paying for all of the insurance for the insurance company to protect it against things that seemingly have not happened to them.
Yet.
Right. Things do happen. They happen far towards the end of the curve.
Right.
Sometimes they happen right at the beginning, the middle. It does, I mean, really. Right. Accidents are accidents, they happen when they happen.
And protecting your property is the thing that most people think about, right? And frankly, you can self-insure right now and take the deductibles off of every car and every home that you own as long as you don't have a loan on it. And that is taking on the amount of risk that you would that most consumers think about.
Now, what would you need to do in order to do that? Why do most people not do that right now? What would you need?
You would need to be able to replace whatever was broken or wrecked, right? You would need to not have a loan on that home or automobile, because if you are in a contract with a bank, they're going to expect you to carry that coverage so that you can replace it no matter how much money you have. If you have a ton of money, don't take loans and you can self-insure a fair amount of your premium.
So you don't have to be loaded to be able to not have loans on the property that you own. Plenty of people own their car outright. They don't need to carry insurance on it. Now,
I won't say that. They're not required by anyone to carry anything to cover the property.
There we go. They need to carry the liability insurance on it,
which is the part of self-insurance that most people don't think about.
Exactly.
So I said I would give you some details, and this is broad stroke pictures of what it looks like to do self-insurance, okay?
Now, before we go any further, I want to be clear. Someone who has really just their vehicle, they don't own a house, they don't own any other property, and they own their vehicle, but you don't want to pay for insurance every month, can they self-insure? The technical answer is yes, but it does require a sizable investment of a bond filed with the state.
Not as much as you would think from a dollar bond perspective. It's actually a fairly low number in most cases that you have to file a bond with the state. The state holds onto that bond and ties that up for a while, just in case you run into somebody else and damage their property. The presumption is that you're going to fix your own property. Now, when you file this bond, in addition to the bond, first I want to pull back the curtain here, bonds are also insurance. So you can't totally escape it, right? If that's your goal, then it's going to be a tough one. But once you file that bond, you also have to file a lot of paperwork with the state. Now, I don't know if you've messed with the state a whole lot in filing paperwork, but I tell you, I buy some cars that don't have titles and I never get it right the first time. So factor into your bond the amount of time it's going to take you to go back and forth with the state to get it filed correctly.
So it's certainly not an easy process.
No, it's not putting a big chunk of money in the bank and saying, I'm good.
And then, once you've got your bond filed and now you are self-insured, you have spent at least a good chunk of money to be able to get there, all right? So if you're struggling to make your monthly insurance payments, this would not appear to be the solution for you.
Certainly not.
Okay, so that is out of the question. So really the people who are considering self-insurance really need to be people of means, right?
Yes. Because that bond is far less than what you should carry for liability coverage, because remember, that bond that's required is out there to protect the people you run into. Now, what you've done by doing all of this work and not investing this money, parking this money someplace, is that you have put a big red flag up for those ambulance chasers that say what?
You got money.
And
you don't play by the rules.
And you're probably going to hire the cheapest lawyer you can find because you're so opposed to bills. And so
certainly
they know.
You're not hiring the same level and the
Right.
same cost of lawyer that a giant insurance company is going to be hiring.
If you're going to go to court, I think that any lawyer would tell you to find an expert. Where you're going to find expert auto and claims litigation lawyers are going to be on staff for the insurance companies 100% of the time.
Yeah.
So that lawyer knows that you're not hiring those people.
But be that as may, maybe we're wrong. Maybe you are going to get a great attorney.
Good for you.
Yes.
So what happens if you lose, though? Because that happens in court. I don't know if you've ever dealt with an attorney, but you can't get a straight answer from one about how it's going to go.
No, and here's the
Right.
thing about insurance companies is they are very, very familiar with contracts.
Right.
And so insurance contracts have the language in them to stipulate how claims will be resolved, what they are obligated to, and these are things that have been vetted with the Department of Insurance. So the state has already regulated the insurance company on how they pay claims and how they handle claims, something they do not regulate on self-insured individuals.
And as an insured, you're not subject to those same safety rules, so they can take everything you own. It's just, you're setting yourself up for a huge loss.
That's the thing, is your assets are always at stake. That's what property and casualty insurance protects. So your assets are all at stake. Now, let's assume for the purpose of this video that you have a lot of assets. Someone who self-insures, I would say, would generally fit in that category. They have so many assets, they pay so much for insurance, they can't fathom that anymore, and they want to find a way to reduce their annual cost. So if that is the case, and you do have that accident, with property and casualty insurance, very often with someone with a lot of assets, we might have a $5 million umbrella because
Right.
they have so much assets that can be seized if they're in the wrong end of a judgment. But what happens if you're self-insured?
They're going to seize your assets.
You've
got to pay that bill. That's kind of what it comes down to. And also understand too, if we have an umbrella, we don't have $5 million of payout. We have $5 million worth of insurance and lawyers. They don't want to spend that money any more than you would want to spend that money, and they're going to make sure they don't. And they're going to know the rules, and they're going to make sure that you're protected.
So that's what you're getting for your money when you're paying for property and casualty insurance.
Right.
It's really protecting against having to liquidate any number of assets because of what happened. And you may think things don't happen to you, but we'll make a video of wild stories from our careers,
Actually,
things that people thought never would have happened.
Subscribe. That's one you're going to want to see for sure, because there are so many wild stories. That'd probably be an hour-long video.
Yeah.
But that's the point of insurance, is you don't know what will happen. You're stepping up to the casino table and you're putting your chips on what you expect to hit. Or not. No pun intended.
Let's say none of this deters you.
No,
you still have the assets. You still pay so much for insurance. You want to know how it works. So a sophisticated form, Justin talked a little bit about the bond, and really that does nothing to protect your assets. That still leaves you going out there finding lawyers. You don't actually have insurance. You've just said, I have enough money, I don't need it. Come and get me, ambulance chasing attorneys. But for a smart way to do self-insurance, you would actually need to set up a private insurance company. And what this is what it sounds like. It is your insurance company. Call it private. Other terminology is a captive insurance company. You would set that up for yourself. Maybe you have a big enough family, it makes a lot of sense. You can put a lot of people together in this captive insurance.
Maybe you've got a lot of very good buddies.
Yeah.
I guess.
So you're going to have to first be able to put up the big premiums that you've already been putting up. For a commercial risk, setting up your own captive insurance company, until you are paying at least $250,000-ish in insurance premiums every year, it does not make financial sense to even set up a captive insurance company. So consider that as the benchmark for personal insurance. We've done a lot of insurance on our day. I can't think of many families we've come across where they have that level of premium commitment a year, but maybe they're out there. If you want to do it, you're setting up your own private insurance company that has attorneys, in-house counsel, it has claims adjusters to be able to handle claims. You're handling your own claims as the insurance carrier, and if they go above a certain threshold, then your insurance is going to step in. Again, we can call it self-insurance if we want, but there is an actual insurance policy associated with it that pays for the excess.
It's how much risk are you willing to take on? And I asked at the top of the video, should you self-insure yourself? And the answer is generally going to be no. If there's enough of you that are curious about this and watching this video, and you leave a comment down below that says, I want to do it, we will research in detail how to do it for you.
Yeah.
But I hope I've deterred you from even considering it, because you're opening yourself up to a world of hurt.
So rather than just say no, don't do it, let's talk about the smart way to self-insure.
Right.
Insurance is, at its core, nothing more than a transfer of risk.
Right.
So even in the private captive insurance company scenario I just painted, you still have an insurance policy that comes in when you have those big catastrophic types of losses. Your private insurance company handles the little stuff, the fender benders, the things that don't result in big bodily injury claims. So homeowners is a big one. That is the one that's hitting a lot of people right now, unless you have teenagers. I mean, the auto stinks, but it's not terrible. Like home insurance is really bad right now. And so what ways can you self-insure wisely? And it first starts with deductibles.
Right.
If you're not going to make claims and you promise that's what you're going to do, and really if you believe that you are not going to make claims.
Here's how I've always asked the question: what amount is going to put you on the street? Yeah. Right? And if you can carry, if your bank will allow you, if you don't have a loan, if you can carry a $15,000 or $20,000 deductible, if you have access to that, it's one of the best ways to save money.
I think these days, especially with the way rates are going, it makes a lot of sense for a homeowner to carry a big line of credit to be able to take on big claims. If you can afford to take on up to a 5% deductible for all types of losses, that's 5% of your dwelling coverage, $1 million house, $50,000 deductible. But if that does not scare you, that will save you a bunch of money on your premium. In addition, because you've taken such a high deductible, there are a lot of coverages that you can get rid of. Water backups and foundation water damage and a bunch of things that are not going to result in catastrophic losses. Spoilage coverage when the electricity goes out and all the food in the freezer is gone. Yes, it bites, but at the same time, did you have $50,000 worth of food in your fridge?
Right.
Probably not. So taking higher deductibles, liability is the thing that's going to kill you, and it's really not that expensive of coverage. So take a lot of liability, take high deductibles, get rid of the bells and whistles, and take on a lot of those little risks yourself. Roofs are huge right now for insurance companies. They're costing them a ton of money. That 5% deductible says, insurance company, you will not be paying for my new roof. Cars, $2,500 deductible.
If you want to do self-insurance because you don't want to pay bills anymore, here's what you got to remember, period. Insurance is for disasters. If you treat it as such and take on most of that risk yourself, you're absolutely going to save money in the long run.
Yeah.
I hope this helps a little bit. And again, I'll make the offer. If enough of you are serious, write self-insurance down below, and we will do enough research to tell you the steps to do it, even though it is not what we do for a living.
Yep.
But hey, we need the views, right? Thanks for watching.
Yep. Come back and see us next time. If you've got a specific state you've got questions on, leave that in your comment as well, and come back and see us next time.